Right, and I think we are live. Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. I may have a third name for these shows as Trading Talk because I am once again joined by another guest. Wasn't going to do a show today, but Bitcoin is pumping, so we need to take a look at what is going on. So say hello to my guest, first time on this channel, and that is FiboSwanny. We met over at Unconfiscatable. Oh,
Sure.
oh.
No, we met
Wait, what happened to
playing
our
poker.
signal? You there? Oh, we met playing poker.
Yeah.
Wait, didn't you come to the conference?
Nope, did not make it to the conference in Vegas.
Oh man, because everybody else that plays poker with us online did. I assumed you did as well.
I had plans to go, but things fell through, and I had to go somewhere else. I actually had to cancel and go somewhere else for personal reasons. But I was planning on.
Oh, that's all good. Well, we got the important thing is you're a fellow tequila drinker, and I'm almost done with this bottle, man.
I got Herradura right here.
Oh, so you got the better one.
The Lucky Horseshoe.
Oh, that's okay. I need to finish this before I open my next one, which is, you know what? This is done. I'm finishing it today. Because the next one that we're going to open during the halving, I have the best tequila I have in the house is the Jose Cuervo Family Reserva.
Nice. Cheers.
So I'm going to open that one up for the halving show. So hopefully you can come through on that show as well.
Nice.
All right. So Fibo, tell us a little something about yourself, and then we're going to jump right into the charts because you are new to my channel.
Yeah. Let me run down a quick resume. I started out way back in the 90s, back trading cattle and grains. I was a futures and options trader for a large hedge. I was hedging cattle for a big brokerage, and I did that for about 6 to 7 years, roughly. And that's really where I learned a lot about all my TA and a lot about my Fibonacci levels and a lot of stuff that I've done over the years. After that, I went over to the energy space. Been there for almost 16 years. So I got a lot of 20 plus years into this, looking at commodities, futures, options, all that kind of stuff. And over on the energy side, I'm the head TA guy at an energy consulting firm. So I've been busy on the energy markets, just got off calls right before I got on here with you. I've been busy all day. And so thank you for having me on and getting me on at 6 o'clock after I got done with my calls.
All right. Very cool. Hey, you got yours, right? You got yours in a glass. So you're gonna drink out of the bottle.
I got a shot glass right here.
Shot glass. Yeah, I like to sip mine. That's why I usually only buy decent tequilas.
Cheers.
Cheers, man. All right. Your main TA focus is Fibonacci's.
Yes. Yeah. One of the things I've been looking at over the years is I kind of approach Fibonacci's in a different way than most people probably look at them. And that just, I think, came from experience. I kind of found what I call a threshold theory. So I take my Fibonacci levels, not so much from the high or low or from a high wick or a low wick. I mean, there's nothing wrong with look at them in that way. But I actually look at my fibs from a break of a threshold, and that's what I categorize them as. I look at a threshold as a place of if you're looking at Trendline or a Fibonacci line or something, that's where your trench warfare is going on. You got buyers and sellers that are fighting, right? So you want to know who's going to win that fight. So that's the threshold that you're trying to break through, and to figure out who's going to win that fight. And during that time, from a trading aspect, I think that threshold is when the anxiety for traders is the highest, because everybody's kind of cool and everything's going along until you get to a certain point. And then the anxiety is really high right at the threshold point. Oh my gosh, should I buy? Should I sell? What's going on? Is it going to break? Is it not? And I think people get into a little bit more emotional trading that goes on at those times. So I've kind of tried to use Fibonacci as a tool to reduce some of that emotion and anxiety, to take the Fibonacci from an actual threshold level instead of high and low. And it's a whole different world, but it's one I've been using for a couple of years now.
All right, sounds really, really cool. We're going to dive into that a little bit. Let me just quickly run through my charts, and then I'm going to hand off the screen share to you. Did you catch the Bully Woo show last night?
I absolutely did. It was good.
Yeah, Bully was great.
There was a lot of information. It was with information with a fire hose. I was trying to get it all in, but there was a ton.
All right, let's review when the halving is. The halving is speeding up. It looks like we are 3 days and 22 hours away. So that means this will be Monday earlier than right now by 2 hours, which is great.
Perfect.
That's actually a good time to kick off the show because we're going to start a few hours earlier than that. So this is perfect. And of course, you see by my background, I am ready with all the clocks. I think the clock on the left side really gives it away of where this background's from. And if you don't know, you are way too young. You have to be a noob in the crypto space. Where's that from, Fibo?
What'd you say? I'm way too young. What?
Well, where's that clock from?
Which clock are you talking from?
The digital clock. What movie is it from?
I don't know.
Really?
Yeah, I can't think of it. Yeah, I can't think of it.
It's the clock in the DeLorean.
Oh, that's where that's it. I was looking at it. I'm thinking I'm looking at that. I'm thinking I've seen that before. So yeah, Back to the Future.
Yeah. And that's where all these clocks are from too. If you remember the opening scene.
Yeah. I get it now. Yeah, I get it.
Man, maybe you're a little too old.
Yeah, maybe too old, but I think I know what you're talking about. It was right there. I was looking at it and I'm thinking, I know I've seen that before, but yeah, DeLorean. Nice. I like your background with clocks, though. It's kind of cool.
Yeah. Oh, and wait, speaking of backgrounds, I'll probably go back to it later, but hey guys, come join us on Monday. On Monday, we will be streaming all day for the halving event. So keep that in mind. All right, let's go back to screen share. And we get into the charts. Hey guys, if you like this show, please hit the like button. Please hit the subscribe button. And of course, feel free to use the affiliate page if you want to support this content. We, of course, are having the financial summit in Bali first week of November and understanding Bitcoin in Malta first week of October. We're at 700 live viewers. Let's go to the charts. We're going to go straight into the daily chart. The daily chart is on a massive candle right now. I am pretty confident we're going to catch yet another 9. The question is, where is it going to happen? The sequential, which is one of my favorite indicators, does not tell you at what price the markets will top. It tells you what day they will top. The price is unknown. I, of course, exited my long trade right here. I, of course, have my HODL position, which is not going anywhere because this is the time to buy all dips. We are back in a bullish environment. I would not recommend anyone selling their HODL stash. But if you're going to be short-term trading, this is where I got out, and I plan to get back in probably around 8 because I'm still expecting us to pull back, and I still have confidence in that pullback. We almost hit 10,000 today. I am 6 days into potentially losing my bet that Bitcoin will close 90 days above 10,000 for the year. So we have 2 hours to go before the candle close. I do not want to see a close above 10,000 because that will save me 1 day on my bet. If it goes to 10,000 later tonight, it's perfectly fine. So my view is that we are still pumping in this final pre-halving pump. We have gone up a lot. The stock market has gone up a lot. Both are due for a bit of a letdown probably later this week, potentially, well, not much later this week. It's already Thursday. So most likely next week. This week has been, I can't believe how fast this week flew by. And I am looking for a top in the near future. At what price that will happen, I have no idea. I don't think, I mean, if we reach this prior swing high, I then would expect us to go higher. The stop and reverse points have been very good to the bullish side of the market on the daily. Not much to say about the weekly. We have broken this resistance line. We still need to close above it. I still think it's more than likely we're going to pull back to below this trend line. By the time this weekly candle ends, I'm not expecting us to close near the highs. Fibbo might have other views on this. The 4-hour is currently on a 5 of 9. We're looking for that 9. It'll probably get to that 9. I am foreseeing slightly more upside here. But once again, the markets are toppy and they are in dire need of a pullback. Looking back at the S&P 500 for the day, we pulled back hard at the end of day once again. Very reminiscent of what happened on Tuesday. The market started off very strong and they pulled back the rest of the day. We will see what tomorrow brings. Right now in the aftermarket session, we are still holding up slightly higher than the close. This is an interesting week for the market. If you look at it on a weekly scale, it is probably a bit of a, it's actually a bullish week, but it's not breaking last week's high. So it's a bit of a nowhere candle. I am not ready to short the stock market yet. It may have a little bit of life in it still. Oil is finally pulling back a little bit. Oil got a little too far, too fast. I don't think oil is going to hold up. I think that's going to go down because the activity is not great. Gold really rallied today. I was not paying attention, totally snoozed on this. I've been looking for a buying opportunity in gold. At the market open, it was right at the lows. It was on a red 8. And I was pretty sure that, the market would stay up and gold would stay down. And I would be looking to buy gold tomorrow into the weekend. And once again, I might have missed my opportunity to buy into gold, but that's okay. I'd rather be sure. I do think gold is going to go higher. But I hate jumping in on it after missing the perfect entry. So I'll probably stay away from gold once again. I hear that, we'll get back to this next week. It was going to be more interesting. The final chart I want to open up before I hand it off to Fibbo is the chart of Bitcoin dominance. I heard Bitcoin dominance has finally started to rise again. So let's take a look at Bitcoin dominance and see what that's doing. I'm pretty sure GBTC premium closed pretty high today. Yeah, it did, 25%. That's pretty damn high.
Yeah, I meant to look at dominance today and I forgot to check it out.
I
said I meant to look at dominance today, but I didn't check it out yet. So
we'll find out I hear Bitcoin dominance is doing well. So yeah, so Bitcoin dominance is back to 68.5. That's a nice little rise. Until Bitcoin dominance makes a new swing high, until it makes a new 2.5-year high. Whoa, not a 2.5-year high. I'm sorry. The last time when Bitcoin dominance makes a new high, it needs to go above, what was our high here? I don't have OHT. So our high was around 71. So when Bitcoin dominance gets to 72, that's going to be interesting because when it gets to 72, it would be the highest it's been in 3 years. So that's what I'm looking forward to. Until then, it's not really interesting. I did say earlier this year that I expect Bitcoin dominance to break 80% by year end. And I'm sticking to it because shitcoins are called shitcoins for a reason. And Bitcoin dominance will get back to its former glory. All right. On this note, I am done. We're almost at 1,000 viewers. Once again, before I come off the screen share and give it to FiboSwanny, please check out the affiliate page, guys. I love my Embly card. It's right here. I'm holding it. Really, really cool stuff. Fibbo, you gonna get one, man?
Yeah, I'm actually gonna work with Alex to get Fibonacci spiral made on mine.
Oh, perfect. I can introduce you to my graphic designer. He's the one that's designing them for people. He doesn't.
Yeah, no, sweet. Yeah, that I when I was playing poker with him, I said, hey, I need a Fibonacci spiral on my card. I think that.
Oh, hell yeah. Yeah, I'll connect you to my graphic designer who's designing all of these. They're absolutely awesome, man.
I like them a lot.
Like the questions that you get when you hand it to a salesman are, man, it's the whole Bitcoin discussion right there. Yeah, so check these things out. And of course, the financial summit. May have to get you out there too. That's a hell of a time. I'm sure Socrates told you all about it. And
yeah, no, I've been talking to Saul about it.
Man, Tesla's been killing me, man. I'm in a Tesla trade, and time is really critical because options are so expensive, and it hasn't moved in 3 days, and it's like pulling teeth with this thing. Usually it's volatile, but no movement at all in 3 days, killing my time decay. And somebody wanted me to glance at Wells Fargo. Something interesting is happening maybe on Wells Fargo. Whoa, whoa, whoa. Wells Fargo is the oldest bank in the US, and it's not doing too well. It is on a 5 of 9, so it's not ready for a total collapse yet. And on a weekly scale, it is on a just starting. Oh, that's not looking good at all.
Is that a new low or no?
Yeah.
Is that a new low or no? No, it doesn't look like it.
That's a new low. Well, it's close enough. 25.25 on the close, 25.23 on the close. It's a new low, man.
Ouch.
It's not good. Not good for Wells Fargo. All right. That's it. I don't really want to go through stocks, guys, right now. So let me just glance at 2 more questions. Oh, Bitcoin dominance is on a 9 daily sell. Oh, that's unfortunate. Is it? Not on this chart. You sure, Zazo?
That's a weekly.
Oh, this is the weekly version. The daily version is on a 9 sell. Oh. All right, so be careful right there. Oh, man, look at that. Look at the 9 sells right there, right there, right there, and right there. Jesus. Isn't it crazy how the sequential works sometimes?
That's absolutely nuts.
Oh, that sucks. That sucks. You wouldn't think it would work on this, right? Like, here's a 9 buy. Here's a 9 buy. This one didn't work out great. This one didn't work out great, but still, the odds
sells
are
look pretty decent.
The sells look good, yeah. There's a combo 13 at the top here, sequential 13 at the top there. And I see an I, so this must have been a 9 as well. Let me zoom in on this one. I didn't see that 9 there. It's sneaky. There it is. Look at that. Wow, incredible. Absolutely incredible. I have no idea how this shit works sometimes, but it works. All right, cool. All right, one more question. Tone, do you think we can make another high around 14,000 before falling back to making a higher low, forming a huge ascending triangle, going back to the December 2017 monthly close? Ooh, that's a tough question. Let me zoom out. Can we go back to 14,000 and work on a descending triangle? Sorry, ascending triangle. A massive ascending triangle. You know, we could, because see, that's 14, and it's a rough one. It's a rough one. It's possible. It's possible. The FOMO is strong with this one, and this one is a lot more orderly and stable than the last one. This one is a little bit cleaner, but if we go to 14,000, what would scare me is a repeat of June into March. Like, I don't want another 9-month, bear market. I don't want another 9-month mini bear. I really don't. I'd rather see a pullback now to 7,000, 8,000 and then slowly get out of this mess. I don't want us to go to 14,000 and then be sitting back at 7,000 in a year and a half. Now, that's not exactly what I want to see. So it's possible, but I wouldn't be happy about it. Monthly chart makes it clearer. Maybe that's the Heikinashi. Maybe. It's still the Heikinashi. I
don't know if I see it.
It's possible, but we need to get there first. Let's not count our chickens yet. We're not even on a green 2 above a green 1 on a monthly chart yet. So let's
It's
let's
rough. It's a rough looking one.
Yeah, let's hold our ponies there for a second. Let's just make sure we get through the halving and still going up afterwards. Let's baby steps. All right. I'm gonna cut the screen share, and the floor is yours, man. Guys, join us for the halving show coming up on Monday. I'm gonna sip my tequila, do my best not to interrupt, but we all know how that goes.
Hey, no, interrupt, ask questions because it could get kind of confusing. I got a whole bunch of stuff on this daily chart, but I have to have it all on here to get kind of the picture and the story that I'm kind of talking about. One of the things I do is when I was talking about thresholds, it's usually breaks of trend lines, but it's trend lines that are backed by what's happening in certain indicators. I use other ones, but the main one I wanted to show, and I did this on Sal's show too. And if you want to go back and go into more detail of everything I've done, go back to his channel and check out our show. I go into a lot of more detail. But one of the things is this was a threshold right here. And the reason I say it's a threshold is, one, we have a trend line here. And one thing I use the RSI for, a lot of people use it for overbought, oversold, coming out of each one is buy and sells out of those regions. And they also look for divergences. I think those are all great and definitely use it for that. But one of the things I do is I like to use the RSI to know if we're trading inside a bullish range or a bearish range. And I'm not going to go into detail on how you find all these levels, but when you go into the RSI, you had this trend line here, and the market was working to the downside, from the high of around 10.4 all the way down to the low of 6.4, working in this bear trend. At the time, the RSI was trading in what I would call a bearish zone. And when it tested the trend line right here, you can see it tested its own resistance on the bearish zone on the indicator itself. But what I did was, when this broke to the upside right here, at the same time the market broke this trend line, you also had some crossovers happening on ADX, and there's some other indicators that I follow. But there was a lot of information that was going on right here. So this was a major buy signal for me, right when this broke right here. So this was a threshold. And what I was talking about before is I like to measure the market from where you actually get a lot of psychology change in the market. A lot of people might take, I got the Fibonacci right here. We can play around with it, but a lot of people might take it from this low down here up to the high, and you can get your levels. But one thing I like to do is I like to take my fib from, let me move it here. I like to take it from the start of the move to the upside. So right here, this candle that actually broke the trend line, I actually take my fib from this point to the upside. And what I like to do is I like to travel along with the Fibonacci as we go. So if we get up to this high right here, let me blow it up so you can probably see it a little better. What I like to do is I like to travel up to the next high. And as this comes down, as you can see right here, it held the 38.2% level on the retracement at this point. RSI was still above this line. If you drew this out, you're in the bullish zone up here on the RSI. So this holding, is the RSI is still up in the bullish zone, is telling you that you should find some buying interest around this range. And it did. It did wick down below. But another thing that I do is I also look at a 3-day rule or a 3-period rule, but we're looking at a daily chart. So you got a 3-day rule going on right here. So it closed down once, but the next day it closed above it. So it didn't really break this. So this was saying that it should continue trend. So you move it up to the next one, the next high. At this point, as it rallies up, it comes back down, and the 38.2% level is right here now. And as you can see, it comes back down, tested a few times as support. And right here, this is where it was getting just on the edge of this. Is it going to change into the bearish zone or not? But you got to look at some other indicators. The momentum was still with the bulls here on the momentum. So, or with the bulls, I mean. So you got a lot of support in the market. So the 38.2 holds and goes on further. So your trend's continuing. So you move your fib up to the next level, nowhere near the 38.2, all the way up to this level. And then you got the high in here, and then the 38.2 comes in at this point right here. What was happening was, if you extend this out, the RSI was breaking down it back into the bearish zone right when this trend line breaks right at this point. So we got a new threshold in the market. So my long from here is telling me to take profit on the short here based on us moving into the bearish zone on the RSI and the trend line break. So now this new threshold is going this direction. So I like to take the fib from that point, and looking at the red Fibonacci's going this direction, you can see I take if you start the fib right here and work your way down to the low here, it's not going to be exact, so I'm just going to draw it on here. You work your way down, and as you come back up, you had this threshold but way back here, and I have it as a yellow line. And there's other thresholds in here, but we won't go over every single one of them. But this one's a main one that I really want to focus on. This break right here was a real major psychology point in the market. And when you look at where this one is now, let me get the Fibonacci drawn in here. The 61.8% level right here held on this, if I take the start of the fib here and the low here, the 38.2 held in here. And this is where that 3-day rule comes into play. Even though it closed once, underneath it popped up, it closed again and popped up, so it's still holding the continued trend. So I had 4 buys along this entire leg based on all of this, and it was the 61.8% level that broke right here. You also broke a trend line here, and then you also had this threshold from over here that all broke at the same time. So this was a major move for me. So on the third day, when this closed for the third day above the 61.8% level at 7.4, it was another buy signal for me, because at this point, the RSI was back above into the bullish zone right here. Momentum was just starting to build for the bulls on a day-over-day basis on the ADX. So all of it was matching up really nicely. So I was telling everybody and their brother to buy here. So I bought down here, bought again here, and I bought again here, and then we've been moving up to the upside here. Now, just real quick, let's see where we're at the moment. Since this is a new threshold, this is a big major move in the market, a big psychology change. If you take your fib from this point, from this break point, you took it up to the high right here. And as you can see, this threshold here on this break of the trend line, which was major at this point, is also right at the 38.2 that held, which I actually bought again on this because it was nowhere near going into the bearish zone on the RSI, even though it's been overbought, and it's been overbought for a while. This held right on this level and popped to the upside here recently. Now you can make it, now you pull it up to the recent high, and the 38.2 right now is at 8,900 based on this movement to the upside. So right now, that's kind of my line in the sand. If it comes down here, I'm going to watch to see if this RSI breaks back down into the bearish zone as the market gets back below this level. If it does, that's going to be a spot that I bought 4 times on the way up here. This will be my first spot to take profit or continue trend. So I know there's a lot going on in here, but I go by thresholds more than I do highs and lows. So
I got questions.
Yeah, I'm sure there's a bunch of them, but go ahead.
All right, so let's start from the beginning. Can you move this chart over? I guess move it to the right so we can see further back to the last high, the prior high. Okay, perfect. My question is on that first trend line. You can zoom in on that first trend line. The down your psychology change on January 3rd or whatever it was.
Yep.
Right. So that trend line, the trend line that it broke, is what I want to question.
Okay.
So can we just zoom in on that a little bit?
How's that?
Okay, perfect. So I would have drawn that trend line because I draw my trend lines differently. I probably would not have used the top of the wick. I would have used basically all of those bodies. So for me, December 16th would have been the break of that trend line.
Let's see. So you're talking something along the lines of, whoop, get this out of the way. You're looking at this.
That. Yes, and I probably wouldn't have went. Oh no, the break. So the top of all. I don't cross any candle bodies. Touch as many candles as you can without breaking their bodies. Perfect. And now lower the other end so that you're also touching the most number of candles without breaking any of their bodies. That would have been my trend line. So, and that would have been the psychological break. So what is wrong with my view on that? The trend line of that zone would have gotten you in a little bit earlier. But like, what do you think of that?
I know what you're saying, and there's nothing wrong with that at all. What I would have done if I would have taken that, and if this was my threshold, I would have taken the Fibonacci off of this and done the same thing right at this point. Here it actually went up, tested the 38.2, came back down and hit the 61.8%, and then held and worked its way up. So it would have still worked. I probably would have been, I probably would have bought on the break of this trend line, but down in here, I wouldn't have been getting the signals that I like to see to kind of back me up. There wasn't a lot of backup here. There was a bit of a move right here.
Let's talk about that RSI, right? Because at which point do you draw that green RSI resistance line? Because you don't know that that point in late December or mid-December is going to get rejected, because like I don't like at which like on what day do you know when to draw that green line?
When that broke above, there's analysis that goes into where these lines come from that would be a little difficult to do at this point in time. But the once this RSI broke above this level right here, this would be my first signal off of this. I wouldn't trade off of this.
No. Okay, no. I think I don't think you understand my question.
Okay.
When did you draw the green line? So obviously, when that happens, you've broken the green line. But what makes you draw that line to begin with? Because prior to December 18, is that line already there?
Yeah, no, it's based on historical analysis that I do to determine where the bears and the bulls actually have major inflection points in the market. So this was a down, like if you look here, this was a downtrend.
So that green line, so you're saying that green line is already there going into the month of December?
Correct.
Because so you just delete the front end of that line, because the way you had it drawn, I couldn't understand why did you draw it there?
Yeah, no, it's been there for a long time. So the way I had it drawn on there could have been confusing, but yeah, no, it was already there and I was waiting on a break of it. And that's right when it broke. And it was basically about the third day above this break is when it broke right here. And then the ADX started to move up on a day over day basis, and the bulls were in control at the time of break. So this break, along with the ADX confirming, and then that's why, I mean, I would have looked at this trend line for sure, but this RSI went into a little bit more consolidation, and we can kind of consolidate it in here. And then that's why I didn't draw this trend line until it broke. And then I knew it was, then it kind of fit right here off of the actual high, off of this high. And then it touched a couple more times and then it broke. So to me, this wouldn't be a normal trend line I would draw, but by looking at the indicators and the movement of the market, I saw on my analysis that it broke to the upside. So that trend line had some meaning to me. The other trend line would have had meaning too, but it broke apart. But it didn't really gain any momentum. The ADX was dropping and the RSI was remaining in what I would call the bearish zone until it broke up into the bullish zone. And then we're in this bullish zone for, a couple more months as we went to the upside. So to me, I'm looking for that major psychology point where the market has an inflection point to where it says, hey, this is where we're really moving from bearish to bullish. And to me, that's my threshold point. And then that's where that's why going forward, I would take the fib level from that break point, because to me, what I would do is the start of the move right here is where I feel there's more of a psychology change in the market, and then that's when these levels start to become more significant to my analysis by looking at fib levels on the way up here. Cool. And then the break here at 38.2 was the signal to the downside, kind of came back down to the 61.8%, held the 38.2 here, and then the break on this trend line here was where I went short, and then I rebought. I covered my long here, I went short here, and then took advantage of that movement of the market based on the movements of the RSI moving from zone to zone that are already pre-drawn for my analysis.
Yep, I gotcha. All right, what else you got for us?
One thing to really watch for now is going to be this 38.2 at 8,900. So basically that 9K. If we can stay up here above this threshold at this point, I think that's going to become your next major support. You were looking at a possible 9 on the way up on the daily when you were looking at your
yeah, we got
sequential.
That's going to come in on Sunday. Today's Thursday, Friday, Saturday, Sunday. 9 is coming on Sunday.
Yeah, so most likely, just from psychological purposes, let me redraw the red one on here. If you look at the fib going this direction from here to the low, the 61.8% level was at 73.87, was basically at this break. Since it broke these thresholds, most likely we should see a full retracement off of from your traditional looking at fibs, the 61.8% level off of. I know I got a lot on here, but let me see here. If you take it from the traditional high or just the swing high here, and then you take it from the low, the 61.8% level matched up with the 233 exponential moving average right here at 79.71. So just taking psychology, if a break of this, you just got a high probability now that we've broken these two threshold levels that we should see a full retracement back to 10.5. So that swing high at 10.5 could be a possibility of a spot for the 9 on what you're looking at on the move to the upside. And then that should be about it. And then we should, probably have a nice retracement. But as I'm watching this, I'm watching 8,900 at the moment. If it gets all the way up to the 10.5, then my 38.2 is going to be at 9.2, 9.3, somewhere right around there. And I'm also looking at this trend line also as a guide of support. So both of those working together is going to be a spot for me to watch. For one, I'm going to see if the RSI is going to start dipping back down into the bearish zone, because we could actually work our way down into here, get a nice retracement back to 8.5, 9,000, somewhere in there, and still be in the bullish zone. And then I would be buying again and just continuing my trend without even getting out of all my longs to the upside. So it just depends on how much we retrace or not, because my 38.2 is going to be my main spot to, a hold there is saying continuation of trend. If it goes all the way to the 61.8% level, that's going to be a different call. But then, of course, if we break the 61.8% and maybe that trend line, then you're talking, major, a lot more retracement to the downside. But those are areas I'm watching at the moment, is going to be how much this retraces back. But I wouldn't be surprised if we got a little bit of resistance at 10K just off of this little bit of a high right here. I think the high right here is
You know,
about what,
10K,
10,000?
10K has never been resistance for Bitcoin. Like going back to 2017, it always blows above or below 10K. This 10.5 top that we had a few early this year was like the closest Bitcoin has ever topped around 10K.
Yeah, no, I get you. 10K is just more of a
bottom.
psychological round number
Yeah.
more than anything else. That's why I really
Hey,
like to see it get back up to this 10.5 and then start retracing.
yeah, I would love to see a double top before a retracement, because that tells me that we're going to break out to new all-time highs a lot sooner than what I've been anticipating
Yep,
prior.
I'm
Because
with you. I'm
double
with you on that.
tops are meant to be broken. And if we are able to make a double top, if we're able to top around 10.5, and we're already almost in the double top zone, anything above, 10,250 makes it a double top to me. And if we double top here, then the pullback is not going to be that long, and I'm probably going to be more bullish going forward. And my other question that I have to you is, how much stock do you put in the Fibonacci retracements from the swing low of 3,800 up to the current high? Where is that 38%? I'm not sure. Your chart is a little bit cluttered. I don't believe that it's all the way at 63. So a 38% retrace from 10,000, between 10,000 and 4,000. That is 6,000. You're taking 40% of 6,000. That could be it, actually.
Here, let me clean it up here so we can. Actually, if this becomes a double top and it breaks out, you're looking at 18K as a possibility of that move.
Which would make it another double top, which makes it even more bullish.
Yep, exactly. I like the way that's setting up. Are you talking about the move? Let's see here.
I'm talking about if you throw fibs on from the March low up to today's high.
Oh, all the way up.
All the way up, right?
Yeah.
How much stock do you put in this?
I do. I mean, it's definitely going to be a level to watch. This 76.39, is that what you're talking about right here?
Mm-hmm.
I mean,
keep in mind that could be up at 10.5 by morning, right?
Yeah, true. One of the things is
we don't know where the top. We don't know where the top is, but the point is, how much stock do you put in these particular Fibonacci levels? And I really like the fact that you don't even have the 50% retracement on, because I hate that one.
It's not a Fibonacci number. I mean, it's good for other. It's good for other things. When you're looking at midpoints for certain things, but when you're looking at Fibonacci analysis, the 50% to me is worthless. Because with applying with what I do now, 50% of, like if you're looking at, the midpoint of maybe a Bollinger Band or, or a channel or different things like that, that makes sense. But when you're looking at fibs, the 50%, just don't use it. I mean, that's just my advice. I mean, you can use it if you can use it and find good things with it, run with it, but it's never worked for me. Maybe because it's not a Fibonacci number. Let's see, the 38.2, I wouldn't give this that much of credence, because unless it gets down to this 38.2 and all of a sudden this line becomes important based on if it's going to break one of my zones in the models that I run, that might bring some significance into it. But given that this wasn't really a major difference in the market for me, it doesn't really mean too much to me at this point in time. But not to say that it doesn't. If people are looking at some other things, it definitely becomes a support level for a lot of people that are looking at the swing high and swing low. But like you said, it could change. It could change differently based on wherever it goes, but
the top can change. It's kind of crazy that number is 7,600. 7,600 is like the number that stands out to me the most throughout the last 3 years, because that's where I felt Bitcoin should have topped in 2017 to maintain an orderly structure going into the future. And we broke way above that and went to 20K. That 7.6K has really, if you look back at the significance of 7.6 thousand, it has always been critical for Bitcoin since it touched it the first time.
No, that's definitely a level historically to watch it, like a horizontal inflection point possibility for sure. But when I look at my fib here, if I actually go from the threshold, so if you actually put it at the threshold point, for what I consider a threshold based on what I look at, this point right here, the 61.8% level is pretty close to the 38.2, which is the 76.35. But if you bring this up to the threshold point right at this, right when this broke right here, you're looking at, you know, kind of roughly 7,700 or so on the 61.8% level, which is also a significant level. So if you brought that 38.2 that you're looking at from the very low to the high so far, it matches up pretty well to where it could retrace back to this point and still continue trend to the upside. But I'm really looking at the 38.2 off of this level at 86.20 because that was the threshold point right there. And then also we broke at this point, consolidated, tested it a couple times, and then broke to the upside. So right now that this level means a lot to me at this 8,600. And of course it can change based on movements of the high at the moment. But my threshold is this point. And then even if you bring it up to the next threshold that I looked at right here, the 61.8% level is at 83 and then 89. Right now, this is the level that I'm going to be looking at the most, was the break of this point up to there. This 8,900, it will be the first spot that I look, but I don't know if the RSI would drop back down into the bearish move or into the bearish zone that quickly. So this threshold to me might come into play a little bit more at 86 and 77 as the two levels to really watch. I mean, you got the 233 exponential in here. You got some other, you know, areas of support. So got to keep an eye on it in there. Because to me, one of the main things I'm going to look at is the break of this daily, you know, movement down into the RSI. Even on the weekly, it's the same kind of thing. On the weekly, you know, we broke this trend line, you know, the one that a lot of people are looking at right here. We also got a crossover, not a lot of momentum yet, but we got a crossover on the directional index lines on the ADX, and we're just on on the level that I watch for the zones. We're just trying to get above that zone on the weekly. So if we can get above this zone on the RSI, keep the crossover on the positive directional index, and we close above this trend line, I actually would like to see 3 weeks of close above this line to really get a nice bullish signal. Or we move up to this trend line and actually close above this trend line. And then all of a sudden this becomes major support threshold for me. So when I talk thresholds, this is a threshold in the making. So if we actually break this and everything else signals, that's going to be my new low in the market. But that hasn't happened yet, but this could be a possibility of a nice major break on the weekly. So it's something I'm keeping an eye on for sure.
We got some questions. They're kind of very specific.
Okay.
So you may need a pen and paper here.
All right.
You may also want to zoom out this chart to go all the way back to 2013.
Are we talking the weekly?
Does it matter when it comes to Fibonacci's?
No, I meant like what when you said specific, I didn't know if there was a specific time frame they're asking or.
All right, let me read the question.
Okay.
Let me read the question. Let's stick to the weekly chart.
Okay.
The Fibonacci trend-based time zone from 2013 top to 2017 top projects a 1.618 zone coming up the week of June 8th of this year. Looks like a possible top to you question. So now we're talking Fibonacci time zones, not Fibonacci price zones. Do you use Fibonacci time zones?
I do, but
so
in a much different way than. Yeah, I use time zones, but it's going to be. I mean, we're going to have to like break in. I can't even do it on the charts. It takes models. It's 300, 400 level math when it comes to cycles and timing. So it's nothing. It's not like just taking.
I personally love that stuff, but let's entertain the question here. if you can double click on the chart so that the ADX and the RSI are not in the way.
Yeah, unfortunately, this is when I did this chart. Somebody asked me to do Coinbase. I can't even go back to 13 on this.
Oh, okay.
So what do we got? What do we want to pull up?
You can pull up Bitstamp or BLX index. Either way, BLX will take you further.
All right, Bitstamp's good. I'll remove all the drawings, get this all cleaned up, and we'll try to figure out what we're talking about here.
Right. So what we're talking about is if you take the Fibonacci time zones and your baseline is the 2013 high, and so 0 is a 2013 high, 2013.
Okay. All right. First of all, we're taking the timing from a high. Cycles are usually low to low.
Well, it's a time
what time frame
right?
we taking the
cycle from top to top, the 2014 top and the 2017 top. So you're
where's
in
the start
area.
point?
You got to go. No,
from
the start
13.
point is 2013. No, the other 13, the top, the 1200 top. Yes.
Okay, right here.
Yes.
All right.
So that's your starting point.
All right. Where's the ending point? Right here.
The ending point is the 2017 top. Yes. And now you're looking at the projection,
which is December at the end of this end of 21.
What kind of setting?
That doesn't make any sense to me. That doesn't make any sense to me. I mean, it does if you're looking at. I mean, are they taking like a trend line here all the way out to 21 to see what the projection would be?
Can you double click on the settings of that, because they look very equidistant to me?
Well, they will be on the one in. Okay, let me see here.
So you don't want to go 0, 1, 2. You want to go 0, 1 and then 1.618.
Yeah, I didn't have this set up. I don't use TradingView for all this.
618. Oh, 18. You can put in the 3. You can put in the 3.8 as well. Actually, I'm curious where that lands. The 3.2. Sorry. Can you add the 3.2 in there? So change the 1.618 to 1.32, and then put them in order.
Oh,
so
I got you.
Instead of 1. Yeah. Oh, look at that. I was hoping it would be closer to a low, but so obviously you don't use it this way.
My question for them is why they started here.
Either, but
that would be my first question.
Well, that was the last really big significant high.
Yeah, true.
And it did almost mark the low of the second bear market.
No, it's interesting. I just haven't looked at timing on TradingView. I use spreadsheets and R and those kind of things. But the because I usually don't take it.
Please don't talk to me about R. It's like the one coding language I never want to see again.
Yeah, I usually get some help with from people that know better than I do, because I sure don't.
I have to code a project in R in grad school. Oh, it was a nightmare.
Yeah, it gets nasty. If you don't understand it, it's pretty nasty. But no,
yeah,
that's
it was a time series analysis class.
Yeah, like econometrics type deal.
It was a financial engineering degree, so not really econometrics. It was literally it was a course called time series analysis.
Yeah, I can see you using that.
That shit gets really complicated really quickly.
Yeah, sorry I can't answer this question
Right.
even any better, but that's I just don't have anything in TradingView set up for timing, but I do use it. It is very
Right. We
because
took a look.
when you're looking at cycles and timing, that's TA 300 400 level stuff. It's not just going out and just drawing from high to high. There's a lot more involved
All right.
with
So here's okay. So I don't want to waste too much time if we have no idea what that represents. Here's another very like similar detailed question that I don't really want to have dead air on.
okay.
So are you saying you like to take the fibs from the overbought, oversold point on the RSI? Or is that only in this case? Have you seen other correlations with this? I'm not really following the question. I don't think that was the one I wanted to read.
No, I don't look at RSI as an overbought or oversold. I look at it as the ranges that it produces, because you can fluctuate back and forth in a bullish trend and still remain in an overbought condition for longer than you could be solvent, put it that way. So, I mean, the importance of a overbought market is to sell when it comes out of that, out of that scenario. I don't look at it. I don't use the RSI for that. A lot of people do, and that's great. And I'm sure you can get good stuff with it. I actually do a lot of analysis to know, and I go back and I look for these thresholds, or these basically psychology changes in the market, these major inflection points, and go back and do analysis on the RSI to see where those inflection points are in the indicator itself, to kind of validate the price movement. So it gets kind of confusing, but so I'm not taking the RSI based on where it is on an overbought or oversold, but if it is in a certain range. And a lot of times the ranges are, a bearish range could be anywhere between, 25 and 65 if it stays in that range, or if it's 25 to 55. It depends on what commodity you're looking at or what asset you're looking at. And then the bullish range could be somewhere between 40 and 85 or something like that. It depends all on what you're looking at. But the analysis will tell you where those ranges are. And right now, a big major level for Bitcoin at the moment on the daily is right around that 57 to 60 range. Somewhere in that range is where you get major inflection points in the market. And right now we're really, really overbought. We're getting, historically really high. So yes, we are overbought. Can you get selling off of that? Yes, you can. But for me, I'm going to keep riding this trend to the upside until it breaks that zone into the bearish zone, and also validates major support levels off of trend lines, off of my Fibonacci levels, all at the same time. And if that happens, that's when I signal to go short, or at least cover longs. And right now that hasn't happened off of this movement. So there's no reason for me to get out of my longs. I could just continue the trend.
Gotcha. All right.
Because it's never happened yet.
I don't want to run the show too long, and I want you to take a look at other traditional markets. So we have one last question. I think this one will be very quick. I see you've drawn a support level on the Fibonacci as of mid-April or so. Sorry, not on the Fibonacci, support level on the RSI as of mid-April right there. Looks like around April 10th or so.
Mm-hmm. Yep.
Nope, not that one.
Mid-April.
April 10th.
Right here?
Yep.
Okay.
So the question is, would you draw another one as of May 1st?
May 1st. No, the reason these are drawn are based on the break right here, and then the hold of this. Once the price tested this threshold that I've been watching for a long time, right at this point of resistance, at this point, that's when the market was telling me it was consolidating, because it was holding this level. Even though it went above it a few times, that's where that 3-day rule comes into play. I want to see 3 settlements above that line. And I only saw one, went down, came back up, settled above it, settled again, but the third one was back below. So this was holding, and then this was also holding. So that's where this line comes into play. It's going to be roughly the same line as back here. Like if you pull all this all the way through, I'm kind of roughing it in here with my mouse, but there's this level back in here is going to be kind of the same area as in here. So all of a sudden, this becomes kind of a consolidation of the indicator itself. And then this was the signal that once it busted here, that's when it busted the threshold that I was looking at that point in time, which was also some Fibonacci levels that aren't drawn on here, but there's a lot more involved than just where that line's drawn. So to draw one on May 1st, are you talking about because it broke this threshold up here? That's what I'm trying to ask.
It's not my question, man. Let's move on.
But so far there hasn't been another threshold break for me to draw any more lines. So no, I wouldn't be drawing.
I gotta say, guys, come on, you gotta step up the question game here. We have a good general question. I will tackle it first, and then I'll hand it off to Fibble.
Okay.
I don't understand if the halving is such an important event in Bitcoin. How can TA be relevant? I'll answer it because TA doesn't care. It's like Bitcoin, like the honey badger doesn't care. TA doesn't care that there's a halving. Using TA is irrelevant. You can show me this chart without showing me the asset, and I will give you the same TA, whether there's a halving or not, whether this is a gold chart, anything. Like you show me a chart without telling me what the asset is, and I will provide my TA analysis. You can show me the same chart 24 hours later, and I will hopefully show you the same analysis because not much has changed. And I don't need to know the asset because TA doesn't depend on that. TA relies on what everyone else thinks. It shows you because price doesn't lie. This is the current value of Bitcoin based on all available information, and the halving is available information. Now, when there are news events that are, I love using these terms. There are known unknowns, and then there are unknown unknowns. There are certain news events that are known unknowns. We know when the halving is. We even know what it is. So the halving is more like a known known. A known unknown is like an earnings report. You know when it is, but you don't know what it's going to say. Then we have the unknown unknowns, like, for example, I don't know, like 9/11, right? Like that's an unknown unknown where the market was unexpectedly hit by a terrorist attack. So the unknown unknowns mess with your TA. The known unknowns, you need to be aware of them. They will mess with your TA. This is why I always say that when you're using TA to trade a stock, do not hold it through the earnings report because that's a known unknown that could mess with your TA, but you know that it's coming. But a halving is a known event. Like you know what's going to happen that day. There is no secret to what the paper is going to show. So the halving should not affect TA analysis. Your thoughts, Fibble?
Yeah, I go by, first of all, all the news that's out there is already dictated in the price based on the first principle of technical analysis. So the way I look at it is there's going to be news items that come out and people are going to react off of those news items. They're going to be emotional and they're going to do different things. But to me, I don't care about any fundamental analysis or any news or anything when I'm looking at a TA chart first, because if the news is worthy enough to change trend in a market, the indicators in my analysis will show me that. Like my signals will say, hey, the news that's coming out matters right now for some reason, whatever news item comes out. So to me, I do all of my TA in a vacuum. I don't care what's happening behind whatever asset I'm looking at. And then I will bring in a fundamental look and other things to help dictate what's going on. So if my TA matches what the fundamentals are doing, that's great. Then you got a much stronger opinion. If they're different, that's when you got to do a little bit more of relying on your models and stick to your guns and know what what your experience is and stick with what your models are and don't let emotion ride. So to me, it's all news is out there. Yes, the market's going to move off of news, but does that news actually matter or not? My indicators will let me know.
Okay, one more question, and then I want you to take a glance at the actual stock market. How much value do you put on Fibonacci extensions?
A lot. I didn't talk about extensions on here, but as you can see, when I pull mine up, the main ones I look at are the 38.2.
Oh, your audio just went a little low. I don't know what
A
happened.
little low. All right, can you hear? Is it better?
Yeah, it's better.
All right. Like whenever I pull my fib up, you can see I use the 38.2, the 61.8, as major moves, movement and trends, but it's the 127.2 and the 141.4 that I use for extensions. And to kind of use that as an example, let me kind of clean some of this up here. Let's see. Let's take, I'm trying to see if there's a good example. Like this move right here. We had a low right here at this point, and you had a high right here. You right here, the 38.2% kind of broke. So, the trend's coming back down the other way. The 61.8% level held right here. Then we had a full retracement all the way back down to the 100% right when this broke, right? Well, the next level to watch is on an extension of this move. Since we're making a new low, this 127 at 63.94 was going to be an area to watch on here. So I use extensions for just for what they are, is extending into new lows. And as you can see, it held right around this level. And then you can take another fib going this direction, this way. 61.8% level broke, and then you had a full retracement. So this whole level down in here all of a sudden became a nice floor off of this extension. So that's one way of using extensions, is looking at possible new lows. Like another one might be you had this low up to this high. You broke out right here at the 100%, and then you consolidated in that 127 to 144 range before we broke to the upside. So again, the extensions are good spots to take it from psychology. If you were looking right here at 6,500 or so, and the market comes down on you like this, and you were a buyer in the market, and the thing runs right through you, you're jumping back and saying, okay, I'm getting hammered, I'm moving back. Where do I set up camp? Where's my next camp of building support in the market? Well, the next spot a lot of people are going to look at is this area in between 127 and 144. So that's kind of the area to kind of watch mentally to see, hey, is this where the market's going to kind of consolidate? And as you can see, it did, and that's a good spot to. Would I be buying here? I don't know. It just depends what other things are going on. But it's the break off of that as it started to trend back up to the upside. It's when my buy came into the market. My buy was in here more on the break to the upside based on, RSI and all that other kind of stuff that I look at. But the extensions are used for that. That's one thing I like to use them for, is to find when people are getting hammered one direction or the other. That's a good spot to look at for a possible, building of support. And it works the other way too. Just like when we were looking at, like if we're looking at where we're looking at right now, and this thing breaks to the upside, just a quick look. If this breaks that 10.4, 10.5, 12.2 to 13.2, which is going to be basically your previous high area, that extension will be a possible area to look at for a reversal back to the other side. If it breaks the high with momentum and all that kind of stuff, we have to get there first. But that would be an area to watch if this thing goes nuts above 10.5.
Gotcha. All right, let's, this is like my third video of the day, man. I'm already getting exhausted. Let's just take a quick peek at maybe S&P and gold, see what you think, and then we might have to wrap this up. Oh, I meant for you to do it.
Oh, I'm sorry. I hit the. Yeah, I got it. Here.
Now that we have, now we're back to over 1,000 viewers. I will take one more look at Bitcoin from my perspective, but I want to get Fibbo's take on the S&P 500 and gold and then I'll do the same, and then I'll take one last peek at the Bitcoin price to close us out.
Yeah, one thing I was looking at on S&P, I know I got a little bit of Elliott Wave on here too, but
that looks like Elliott Waves, man. Are you trying to get banned from Tone Vays YouTube channel?
hey,
I'm kidding.
This was somebody that asked for me to do it for them, so I did.
By the way, did you know Elliott Waves?
Take off the.
I've been searching. I've been cleaning up my computer, and I found some actual like Bloomberg documentation on Elliott Wave trading, if you're curious.
Yeah, no, that's great. The Elliott Wave works with Fibs, and so I use Elliott Wave as a basically a validator of maybe getting in and out. I would never trade. I don't trade off of it at all. I just use it as a make sure that the patterns are matching what the Fibs are showing. But in this case, I kind of did the same thing. You take the low down here and just kind of looking at the previous high on the S&P. Right now, this 38.2 at 26.57 is my line in the sand. I was kind of looking at this wave structure, and a lot of people are asking me this weird consolidation that we have in here that I have as an ABC, because the B made a little bit of a new high. But that's called kind of an expanded flat. So you're kind of working sideways here. So I got this 1, 2, 3, and this sideways here with a possibility of a move to the upside. And the whole reason for that is when you move these Fibs, when you went up to this level right here, right at this point, the 38.2% level held right here, and then you can kind of move it up to the next point up here. The 38.2 wasn't even close, so the trend's just continuing. And then you move it all the way up to the high here, and then all of a sudden you got this 38.2 that I'm looking at right here. Or sorry about that, moving the wrong thing. Got too many things on the chart.
So you do see it going higher. You see S&P breaking 3,000.
Yes, I do. As long as this pattern holds, yeah, because right now, I mean, if you look at Elliott Wave, and we don't want to get involved in this, but you get the 1 and then the 2 right here, which is an ABC correction right here.
I know how to use Elliott Waves. I mean, that is something that I studied. I actually met one of the guys who provided his computer to Prector, because this was back in like the early 80s when there wasn't much computer power. Like I'm very familiar with Elliott Waves. I can show you guys my notes and my charts, like with Elliott Waves on Apple from like early 2000s, before the iPhone even came out. So I'm fully aware of it. I just think it's ridiculous, but go on.
No, I'm just looking at it just off of measurements. So when you look at, basically, if this wave 1 here and this is 2, and if this is 3 right in here, 3 is longer, then 3's always got to be at least is never the shortest, but it's the longest in this case. So when this is the case, then 1 and 5 usually match distance and rate of change. That's what the blue is here. So if this C holds right here, the 61.8% level would be the minimum target, which is about 3,000, but it could go all the way up to 3190 off of this move to the upside, as long as this 38.2 holds, because this is the current high. This 2657 is my line in the sand. So if this comes down and breaks from the longs that I've bought back in here, I will be out of the market on the break to the downside here. I don't have all the RSI and stuff on this one, but it all works the same as what I was showing on the other stuff. And then also when you take this was also right at this point was also a threshold based off a trend line. I don't have it drawn on here, but the same kind of thing happened here. The C came down here on the 38.2 off of this high and has still held on this level. So no matter which fib I'm looking at, from the low or even from my threshold, this pattern's holding very nicely. So I am staying long this market as long as this pattern holds. So
my portfolio is currently skewed to the upside, so I just need
right now it's skewed to the upside. Yeah, I don't know. I haven't looked at where's your S&P. Yeah, where's your S&P when it comes to the sequential looking at it at this point? Is it still
good question? I'll take a look at it after. Can you show us gold?
I don't have gold up. I mean, I could pull a gold chart. I don't have gold on here at the moment. Let me pull up gold. Let me see. Yeah, I'll just pull up a gold chart. How's that? And we'll start
Yeah,
from
that's fine.
scratch.
Just type it's GC. Yeah. Oh, you're the commodities guy.
futures.
You know better.
Yeah. I haven't done anything on this, but just eyeballing it, just using it from what we were just talking about. This move down right here, where there was a break in the trend, so I'm going to use this point. I won't use the low. I'll use this point as the fib. Right at this point, the 38.2 was tested, but I like the 3-day rule here. It didn't break, so the continuation of trend at this point, even though it traded underneath, it closed once, closed twice, but the third close was above it. So I love that 3-day rule. It's a nice filter, and it does keep you in play a lot longer. Now, if this, and then the 61.8% would be your line in the sand. If this came down and broke there, that's where you can get a little bit more trouble. But that it held and kept going. So the next step would be moving it up to the next level. And then you can see the 38.2 level held here. And that's kind of where we're at currently. So right now we're in this consolidation. I haven't really done a lot of analysis on this, but this trend right here would be one I'm going to be watching. If I went into my indicators, most likely this might be a threshold point. I'd have to check on some things, but right now, this triangle that we're looking at, the 38.2 at 1662 would be a nice floor. And then, of course, this trend line to the downside is going to be your ceiling. And a nice break to the upside here would be very nice. But I do like the continuation of trend as long as the fibs are cooperating.
All right, very cool. Hey, I'm gonna steal a screen share because apparently Bitcoin is about to break 10,000. So we're gonna go and take a look at that. My S&P, we're kind of in the middle of nowhere right now. I'm in a no trade zone. If we break back above on sequential, we're about to kick off a brand new count on the daily, and the weekly still has plenty of upside because we're still on a green 5 of 9. So sequential is telling you all systems go. Let's go to the 4-hour chart.
3,000 move on what I'm looking at could easily be a 9 on that move.
All right. Did we break 10,000? We tied. Look at that. The high is 10,000.00. We technically did not break it. We hit it. Okay, so I have 33 minutes, and this sucker better close the day below 10,000, even by a penny, because then I get to save 1 day in my bet. But yeah, there it is. It hasn't cracked 10,000 yet, but I'm pretty sure that it will. I'm pretty confident that it will crack 10,000 at any second. I don't see any tops. The 4-hour is only on a 5. The daily is only on a 6, and the weekly is only on a 5. So the trend line that I was expecting to knock us down has been cracked, and we are going higher. I do not chase. I can't even chase because the stock market's closed, so I can't buy GBTC even if I wanted to, and I wouldn't buy it right now because of the high premium. I'm okay with that. Again, I'm a Bitcoin hodler first and second and third, and Bitcoin trader a distant fourth. So I am happy about this. I'm not happy that I'm not as right as I could be, but I am happy that Bitcoin is breaking out, especially now that we're in a bull market. And I became officially a bull on this day. There's tweets to indicate that. So that's a weekly chart though. But we are going to top. If it's a double top, I become a huge bull, even bigger. The best trade, I guess, was using the stop and reverse points, man. Would have kept you in the entire time. Almost got you out right here. Almost got you out right here. And the stop and reverse points are doing phenomenally on the daily chart. This is great. Man, I remember doing this stream the first time it ever broke 10,000, and now we're doing it again. This feels like the first time because now we are into another halving, and this is great. This is
So I'm going more tequila on this possible 10,000 break for the
I'm
bull.
not, nope, nope, nope. I'm gonna be tequila free
I know
until
you don't
Monday.
want it. I don't. I know you don't want it because you don't want it above 10,000 for today. You can have it go tomorrow.
I just don't want it for today, and today is only 30 minutes longer. So close.
So far, so good.
So yeah, I mean, I'm bullish right now. I'm always bullish when things are rising. I only call tops when something like this happens. Talk about a perfect 9 at the top. This double 9 that's gonna show up, I'm gonna be pretty bearish when this 9 comes, especially the higher we go into the 9, the more I'm gonna be confident in the 9 topping the market. I trusted the 9 here. I trusted the 9 here. I trusted the 9 there. I also trusted this 9, but this 9 failed. So let's see what the next one does. But that's what usually happens, right? Like everyone ignores this. Everyone ignores this. Everyone says, well, it's not going to happen the third time in a row, and it does. So then everyone assumes that it's going to happen this time, and that's when it doesn't. But I trust them all. I always trust the sequential. So it will not work every time, but
I got bad news for you, Tone.
Yeah, what's up?
We're above 10,000.
Oh, no, it's fine to be above 10,000 as long as it's not above 10,000 in 29 minutes.
Oh, in the close. I got you.
Yeah, it's at the close.
Gotcha.
Yeah, it's at the close. So as long as we're below 10,000 at exactly 8 p.m., I will be happier.
You're good. I got
you. And then we can go higher.
Now it'll be interesting to see if this full retracement hits a 9 on the upside at 10.5. That'd be kind of awesome.
I mean, it's going to hit a 9. The chances that it's not going to hit a 9 are very small. It would literally have to fall down to 9,100 by Sunday. I mean, it can do it, but it doesn't look like it. I think the FOMO into the halving is going to drag this out further. This thing could be at 12,000 by the halving, which would be very interesting because if we break this high by a significant margin, it changes a lot. If we go all the way to 14, it's a little scary. But if we only break this high, if we stay under 12K, that becomes very interesting because then a 30% pullback or even a 40% pullback from 12K still keeps us like in that 9,000 and above zone. And that's your new base level.
Yeah, no, I like that.
All right. Hey guys, if you like this video, please hit the like button. We have 1,200 viewers and we have 300 likes. If you like this video, please literally like it, share it with your friends, check out the affiliate page if you like to support. Also, if Bali is an event for you, come down to Indonesia. If understanding Bitcoin is an event for you, come down to Malta. As long as we're allowed to travel and the financial summit is less than 50 people. The understanding Bitcoin is more than 50 people. So as long as gatherings of 50 people or more are allowed and travel is allowed, this event goes on. That's all I have to say. We're going to refresh the Bitcoin halving clock. We were at 3 days, 21 hours. And now we are at 3 days, well, kind of 21 hours. I'm going to hand it back to FiboSwanny one more time so he can sign us off and maybe tell my viewers where they can potentially get a hold of you, though be careful what you ask for. And do you have any channels? Do you publish on TradingView? Do you have a Telegram group? Or do you just trade for yourself and hang out on play poker online with us and just hang out on these channels?
No, I do a little bit of both. Main thing I'm definitely out on TradingView at FiboSwanny, which is FiboSwanny. I'm out on TradingView and I'm out on Twitter. Those are the two places I mainly hang out and do all my charts. My day job keeps me very busy, so in the evenings is when I'm doing the Bitcoin and cryptocurrency. Energy is my focus during the day, but if you want to follow me out on Twitter or TradingView, go ahead. And that's where I try to answer any questions that I can from people that are asking anything about Fibonacci or even just TA in general, since I've been doing it for a couple decades now. Any questions, and if I do have time, I will answer everything I possibly can, because one of my goals is being an OG is helping others get better at what they're trying to accomplish, and I feel like that's something that I'm set to do.
Oh, I never asked you. When did you get into Bitcoin?
I started in about 2016, about mid-year.
Okay.
I knew about it since 11 and 12. I didn't quite get into it at that point in time, but it was something I started to look at a little bit more in 16. Because I mean, for TA purposes, I think the Forex market works really well with technical analysis. And I was thinking, you know what, if Bitcoin starts to become a little bit more, a little bit more liquidity and a little bit more players in the market, this might be something that TA would work really well on. That's why I jumped in around 16 and started doing some charts since then, and kind of helping people out. I'm more of a behind the scenes guy because I work all day. I don't have time. I did have a YouTube channel at one time, but it was just too much time. I couldn't keep up with the, making.
Really?
Content.
It's so easy. Just do 3 videos a day.
Yeah, no. If I had time, I would, but no, it wasn't working. So, I mean, you can go out and look at, it's called support and resistance. There's still a lot of videos out there that I talk about ADX. I talk about RSI. I talk about Fibs. So there's a lot of things you can get out there, a lot of good information that if you want to go out there and check that out, you can. I do not produce there anymore. So if you want to ask questions, go to Twitter or TradingView.
All right, guys. Thank you so much for watching. Come join us all day on Monday. This quarantine needs to end. This will be my end. This is my last 2 weeks of quarantine. I'm actually gonna, I have not even gone food shopping in a month. I am almost out of meat. So I need to do, a huge level of meat shopping this weekend. Monday is gonna be all day trading. And the only way I can keep track of my quarantine days is literally by putting hashes. This is 43 days in quarantine. I am going to make it past 50 minus the food shopping I plan to do over the weekend. 1 more week in quarantine, and then that's it. Then I'm calling up my friends and I'm going to say, all right, who's willing to hang out for a barbecue? Because it's time for this shit to end. It's time before you die of mental illness. It's time to take your chances, especially if you're young and healthy. Not medical advice, but that's what I'm doing. All right, guys. Hey, we got a final tip question. Beer money from the UK. Thank you. Thank you, Jackass, for your content, Tone. Thank you. Thanks for your software. Thanks for awesome. You are, of course, welcome. All right. Thank you so much, guys. And I will see you all on the next one. Halving's almost here. Join us on all day stream Monday. Bye, guys.